Good morning and welcome to Stock Market Today. It's Monday, November 19th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and Stock Charts TV. And you can sign up to receive a free email, follow along with this show, as well as get free stock ideas every day. Head over to chaikinanalytics.com/today. So I hope everybody had a great weekend and we're ready for a holiday shortened week. U.S. equities were mostly higher on Friday. The S&P 500 finished higher for a second day after 5 straight days of declines. REITs, utilities, energy led, while consumer discretionary and communication services, tech, and industrials finished lower on Friday. Treasuries were stronger across the curve with a bit of steepening. The dollar was weaker on the major crosses. Gold finished up 70 basis points, and WTI crude was up 60 basis points. So as I said, your REITs, your utilities, energy, materials, healthcare, and staples outperformed. Discretionary, comm services, tech, industrials, and financials underperformed. And as we get to the desk here this morning, S&P futures are down 40 basis points after equities finished lower last week. Asian markets were mostly higher overnight, with China extending its recent outperformance. European markets are higher as well. Treasuries are weaker across the curve following that strength last week. The dollar is weaker versus the euro and the yen. Gold up 10 basis points. WTI crude up 70 basis points after losing more than 5.5% last week. And just keep in mind, this week, it's a holiday shortened week. As the week goes on, some liquidity is going to dry up, especially as we get into Wednesday afternoon. And then Friday, of course, is a half day of trading following the day off on Thursday for the Thanksgiving holiday. So here's your S&P 500. It's on a 2-day winning streak after 5 straight days of declines, holding above that key support level around 2,700. We're defining support in the 2,670 to 2,700 zone. Resistance comes into play from a price-based standpoint, 27.95 to 28.15 zone. I think that 28.15 zone is important. Obviously, we're still below the declining 200-day moving average, so we will have to contend with that. But should the market rally through, 28.15 really a key level from a price perspective. And I think that if we could break through there, that would set the stage for a rally into the end of the year. One thing of concern is that the RSI remains in bearish ranges, so momentum kind of confirming the weakness in price that we've seen since late September. However, the Chaikin money flow indicator is holding a bullish reading. So some mixed signals here on the indicator front, kind of lines up with the range-bound trade we've been seeing in between key support and resistance. And just bear in mind that the 200-day moving average, downward sloping, is at 2760. Your market in a minute. Here's what I'm talking about in my note to Chaikin Analytics members today. S&P 500 starts the holiday week below the 200-day moving average. We touched on that already. The 10-year yield is below 3.1% as defensive positioning continues. Commodities are range-bound as the dollar pulls back within an uptrend, and futures, as I said, excuse me, do point to a lower open here this morning. Taking a look at the power bars for the major indices, Dow up 57 basis points on Friday. Power bar saw some improvement. 4 bullish or very bullish stocks, 3 bearish or very bearish stocks. S&P 500 adds 27 basis points, 58 bulls, 76 bears for that index. NASDAQ down on the day as an underperformer as tech came under pressure following reports from NVIDIA and Applied Materials. Although it's interesting to note that the semiconductors held in, but the NASDAQ was down 35 basis points. It is 13 bullish or very bullish stocks, 8 bearish or very bearish stocks. Small caps are an inline performer, but that power bar ratio is still bearish, 199 to 472. Bonds uptick, sending yields lower. Utilities moving with the price of bonds, as well as just some of the defensive positioning that we're seeing. Utilities added 1.54% on Friday, has 9 bullish or very bullish stocks, 0 bearish or very bearish stocks. And according to the Chaikin Power Bar, small cap stocks are more bearish than large cap stocks. Major markets are mixed. Our stock of the day today, if you're following along in that email at home, today's stock of the day, auto-generated based on our proprietary Chaikin Power Gauge rating, is Arch Coal, ticker symbol ARCH, comes to us from the metals, the non-ferrous metals industry group. Closed at 96 19 on Friday, up 1.57%, and has a very bullish shake and power gauge rating due to a very attractive financial metrics and strong earnings performance. And when we roll up the 20 factors that fall into these four main categories, we come out with that very bullish rating. Taking a look at the chart now, very bullish stock, strong trend, but a weak industry group. Arched coal, if we're reading up from the bottom of the screen, here's our ribbon. Tells us where the power gauge rating is and has been. You can see we've been bullish since late July, but it was only recently, in about early October, that the stock began to outperform relative to the broader market. So market and model are in agreement. Dynamic duo in gear. So let's check out the tactical setup. Closer to overbought than to oversold. Chaikin money flow has been mixed for the past few months, currently on a bearish rating, but we are above a rising long-term trend line. There is resistance just overhead around $100. I think we want to watch Arch Coal. No, we've been adding a lot of names to like a bullish watch list recently, but that's just because just given the choppy market environment, I think it makes sense to wait for some prime setups. And by prime setups, we want names that are oversold. We want strong names that are oversold. And that post-election rally really produced some overbought conditions for individual equities as well as the market. So we want to wait for those overbought conditions to work off a bit. If Arch Coal can continue to go sideways, build strong support in the 90 to 95 area, that sets the stage for a rally. Once we become oversold, I'm adding Arch to a bullish watch list today. Looking at our sector tracker now, movement over the last 5 days, real estate, top of the list. That's defensive positioning as well as a function of yields coming in. Utilities, same story there. Defensive positioning and falling yields. Materials seeing a bit of a counter trend rally as commodities stabilized a bit. Bottom of the list, discretionary under pressure over the last 5 days, as has been technology, two of the larger groups within the S&P 500. We'd like to see these groups get into gear. Energy, obviously under pressure with oils. That group rounds out the bottom three of performers over the last 5 days. Middle of the road, healthcare, comms, and financials. Our industry in focus today is bank services. Bank services over the past 6 months has underperformed the S&P 500 by about 11.5%. And that power bar ratio, which measures future potential, it is weak, with more bearish than bullish stocks. But however, it's currently ranked number 5 of 21 subsectors and has moved up 1 slot over the past week. So, the weak, whether an industry is weak or strong, depends on this power bar ratio. And you can see here that a weak ratio still gets the industry group to number 5 of 21. 6 bearish stocks, 4 bullish or very bullish stocks. Some of the indicative names there, Bank of Hawaii, BOH, has a very bearish shake and power gauge rating. First Republic Bank, FRC, has a very bearish shake and power gauge rating. And BOK Financial, BOKF, has a bearish power gauge rating. And if we take a look at one of these names here today, I see a compelling setup for a bearish trade. Very bearish stock is FRC, closed at 93.96, down 53 basis points on Friday. FRC, very bearish rating, weak trend, weak industry group. So we know we are fishing in the right pond. Ribbon at the bottom of the screen here tells us where we are and where we've been. We've been on that bearish range since about September and underperforming the market since that time frame. So market and model in agreement. Dynamic duo in gear to the bearish side of the coin. Currently, the stock is overbought, and money flow, while bullish here, is ever so slightly bullish. But look at the personality of money flow really since the June timeframe has been intensely bearish. Stock has had a nice counter trend rally, but remains below the declining long-term trend line. This looks like a compelling setup for a bearish trade. If you trade to the bearish side, you want to look at maybe put options or vertical put spreads to take advantage of potential downside here for the stock. And if you own the stock, I think you need to ask yourself, why do you own it, and really kind of dig in and understand if it makes sense to stick with a bullish view on this stock, as our metrics all line up to say that this one is on the bear side of the coin. Take a look at FRC as a potentially bearish trade here. Looking at our trending names now, Friday's S&P 500 movers, PCG and EIX, the two utility games most levered to the fires in California. Regulatory body out there came out and said they do not want PCG or would not like to see PCG go bankrupt. So those comments around solvency lent a bid to PCG and EIX. PCG, though, was down about 60% in a very short time frame. So snapback rallied 37% on Friday. EIX added 15%. NetApp catching a little bit of a bounce after its earnings-induced sell-off. Cody up 4.36% COTY as it was reported that one of their large holders was adding to their position. No real news on HP other than to say that it was rallying from oversold conditions. This is an oil services company, so we saw a little bit of a rally in oil and a rally in some of the stocks surrounded by it. That it, within that energy complex, and HP did catch an upgrade this morning, so that's worth noting. NVIDIA down 18.75% following their earnings announcement. JW Nordstrom down over 13.5% following their earnings print. Activision Blizzard, didn't see a ton of news here to drive this stock down nearly 5%. Same with HBI. AMD down following reports from AMAT and NVIDIA. That stock has been very volatile. It was down 3.86% on Friday. Turning now to our earnings update, Friday surprises, Viacom B. Viacom B is a name that Mark Chaikin has liked. He highlighted it a couple weeks ago in his weekly insights note to our members as a bullish idea. They beat by 4 cents, and stock's in the news here this morning as the New York Post is reporting that CBS and Viacom could announce a merger deal within the next 3 to 6 weeks. So Viacom, a name to keep an eye on. Also worth noting that Mark highlighted it again in his note to our members, which came out yesterday afternoon. So turning now to some of the key themes that I'm looking at. We look at the major markets on Mondays in my note to Chaikin Analytics members, kind of key themes across the macro level, one of which is obviously the 10-year yield, and it's fading from resistance. Notice how we made this initial high, tried to rally back, couldn't take it out. What's interesting is that created a negative divergence as this high in yield was met with a lower high in the RSI. Now we've moved lower as investors have bid up treasuries in a little bit of a defensive stance, kind of the similar dynamics that are driving the defensive groups within the equity market. Now the yield is pulled back below the 50-day moving average. We do have support here around 3% for yields, and we are above the rising 200-day moving average. So I don't expect a ton of downside for yields here in the near term as we are approaching support levels, but it is something to keep in mind. This momentum divergence is something to keep an eye on. Oil tries to find a bottom. Here's WTI. After 12 straight days of declines, we've rallied for a few days here, but we're still deeply oversold based on the RSI, below the moving averages, which are now declining and kind of testing support around this $54 level. So we can't rule out a rally from oversold conditions, but I would note that we start to come into some strong resistance around $64. I think you need to treat rallies within the group as suspect. I think there's probably some opportunities in oversold energy names for those who are trading a little bit more on the nimble side, a little more short-term oriented. I think you can try to find some bullish energy names that have become oversold as energy stabilizes relative to the broader market here a bit. But I do think rallies are suspect. They are guilty until proven innocent at this point in time. And I think something that could help energy, if it does persist, is this pullback that we're seeing in the dollar. Commodities are priced in dollars, so a weaker dollar helps the commodity names. Pulling back from the highs, but still in an uptrend above support. RSI remains in bullish ranges, and Chaikin money flow for the UUP, the dollar bullish ETF, does remain strong. So keep an eye on the dollar as a potential read for commodities. If the dollar stabilizes and begins to move higher again, I think that could have negative implications for commodities. However, it could have positive implications for the relative performance of small caps. So that's it for our Monday. Sign up for the email. Get daily stock ideas for free. Follow along with this show, chaikinanalytics.com/today. Look forward to seeing you here tomorrow, 9:15 a.m. Have a great day, everyone.